S&P 500 a point away from an all-time closing high. The Russell regains its footing. Jerome Powell's speech on Friday calms the market, pushes RSP to all-time highs. Financials are leading the S&P, which is always a bullish sign. Regional banks lag, but rate cuts might do the magic. Needed to get them moving. We're seeing two major developments we're going to go through. JP Morgan hitting all-time highs. What this means for the broad-based financial sector, specifically two subsectors. High flyer Nvidia has earnings on Wednesday. Will that be enough to get the stocks over a major hurdle? The dollar-yen awkward relationship and how it's making it harder for Jerome to do his job. We have a ton to go over. Let's get to it. Hey everybody, welcome back. We have a lot to go over. Let's just jump into it. Obviously, we can all see the hammer here. And what we're going to do is take the long term and then zoom in on the week. But if we can see how we just flipped right here, and now look at that close. Now, this is really important to get because this is something that most people missed. One of the guys in the community picked it up perfectly, actually, when it flipped again. But it looks like it's been consistent. It hasn't. It just started again here. But this is a multi-year breakout. Now, we have a lot going on out there. And if everybody watches these videos for some time, they know how I view things. And I view things from a 34,000 foot kind of view. And then from there, I tend to zoom in, right? So I do index, and then I do sector, and then I do stock. And this makes me an investor that is top down or a trader that trades top down. Meaning I see the Jackson Hole news, I look at what sectors are affected by that, how the indexes respond to it, and then I look for opportunity and where I can make it based upon those movements. That's very different than bottom up. Bottom up is I like Tesla. Tesla makes a good car. I'm joking, of course. And then what you'll see happen is that's just bottom up because I want to buy the stock because Tesla. All right, let's just keep going. And I'm sure I'll get comments on that one, but it was worth it. So what you can see here is that breakout. It's a multi-year breakout going straight across, right? Now, what you're looking for is follow through. But what's important about this is if I take that level right there and we just look at that, the S&P is not doing that. So what does this tell you? All right, let's look at it this. If the RSP is breaking out in your equal weight and the S&P is not breaking out the same way and you are not equal weight, what does that tell you? Well, the S&P 38% is 7 names. That would tell you that those 7 names are lagging. So Magnificent 7 is lagging versus the rest of the market. There are two major trends that developed over the past 2 weeks. One, I think people are getting, we're going to get into. Two, I don't think people are truly understanding what's happening under the hood, and I'm going to explain it in great detail. I think it's very important for you to get not just the one trend, but the second part of what it's going to do to the market, because some of these names are just going to continue to grind higher, and I think a lot of people are going to miss it. But I think it's important for us to look technically at the market and what's transpired and go from there. So let's do it. As I stated, we're going to zoom out. We're going to zoom in on a couple of these charts. But if we take a look at the SPY, I use RSI. And I'm actually going to create a list of all the different indicators and oscillators that I do and then just put them in a little book and make it available to people because I keep getting asked about them. But this is just set at a 15 open, high, low, close. And it's why it looks different than the standard one. And quite frankly, I think it's better because it's smoother. But for those that ask about the RSI settings, and a lot of my settings are just a little tweaked differently just to smooth things out, and I think they give better signals, frankly. And I'll just put them in a little pamphlet somewhere so people can get it for free. If you look at our range, we're range bound. What I don't like here is I don't like the higher high here and that we're not making one here. That's very different than when we come here and we start looking at RSP, where RSP is breaking out on a 4-year and you're not above yet. So in one sector, I have the SPY, okay, that is giving me a possible negative divergence that's near the high. And on the other side, I have RSP that is breaking out. This is really important to note because then you can go through the names that are moving and understand the diversification through those names. That's going to be really important when we get to that. Also, I need to walk through how I'm trading this market a little bit. I'm doing it a little bit differently. Here are the cues. And again, all I'm doing is overlaying a 4-hour chart, and we're overlaying that 4-hour chart, looking at where we stand in regards to this. So out of the 3 markets that I just went over, even though we're always getting to trade the NASDAQ, which one of those 3 looks the weak, right? To me, it's pretty simple which one looks the weakest. I think that the NASDAQ looks the weakest. Now, if you go into IWM and we overlay IWM, does that look weak? No. Guys nailed this trade in the room. I say guys in general term because there's a lot of ladies in the room, but look at what's going on with now. Look at Toll Brothers and these trades and how they're breaking out on what just happened. All right, as soon as he changed his language on Jackson Hole to it's time, I mean, they were pretty much his exact words. It's time to start cutting rates. You can read between the lines. I can show you tons of cool graphs. I'm going to save everyone a lot of time. He's cutting rates. The question is Is he going to cut 25 or 50? I'm going to say everyone a lot of time there as well. He's hands down going to cut 25, barring some news. There's no way he's going to look like he's in a hurry after what he did. He's just not going to do it. I think at this point, he's trying to thread the needle between who gets in office and how he keeps his job, which he desperately wants. And that's threading the needle right now, quite frankly. Now, if you take a look at KRE, did we break out? Yes and no. You're on that 4-hour chart, and this is starting to point up. But these sectors are supposed to do very well going into rate cuts, and they should. We're going to hear talk about things along the lines of, oh, well, we're going into a recession, we're pulling back. Look, guys, this market is going to be very difficult to read, and I'll give you a great example of this. If you take a look at the Qs here, I'm going to clean all this off, and I'll show you. And this is important because I think a lot of people are missing how hard this is. I know everybody, on social media is just showing you how simple it is. I'm going to show you where I'm at actually and how I'm trading differently. I'm actually doing less and larger trades right now, because that's what's working. And I'll explain why and how the market's completely correlated right now. But you should see that already, the correlation. This bar encompassing this. Now, I use this indicator and I don't show it a lot, but this is just a DeMark indicator. And what you have here is you have a 9. And that's usually a sign of exhaustion. Now, what's important about that is that could also be a sell signal. Now, I'm going to explain how these sell signals work just in a second. Now, a daily sell signal only got saved on the Qs and the S&P by closing above that high. And when did you finally get above that high? Right at the end of the day. And who buys at the end of the day? It's usually institutions. 20% of institutional buying now is happening in the last 10 minutes. How insane that is just crazy. They're just trying not to show what they're doing. But again, you know how the market works. The first hour is always retail, right? And they're always whacking themselves around into oblivion. And then you have like that 1 to 2 little level. And then at the end of the day, you start seeing what institutions are really doing. But that's really important to get, guys, because had that not happened, I would have had outright sell signal. Now, if we look at the S&P during the 5 minutes, hopefully you just noticed how we just went from a weekly to a 4-hour to an hourly to a 5-minute chart to see what. But if you take a look at here and you see how you're bouncing, right? And you held. Okay, so that we got that going for us. The undercut, we couldn't get back here. Look at the difference here between the opening, and I'll go right to the open, and when we flip there versus taking a look at the Qs and when the Qs flip the open. And let me clean that off so you can get what I am putting down. See it? See the difference in the two markets? Now wait, there's more. By the way, if you are on the wait list to get into the community, and if you're not, please get on the list if you're interested, because after this batch goes out from the wait list, the prices are going to raise for the community. And then after that, I'm probably closing it for the rest of the year. So just FYI, because I know people have been on there for a while, but everyone will be getting an invitation shortly that's on that list before the prices go up. But I just want to get that out there while it's on my head. Okay, anybody notice the difference between the RSP and where that's moving and where the NASDAQ was and where the S&P was? So if you had to go out there and use your skills of deduction, where's the money going? Show me the money. You're going right here. You're going into equal weight. You are not going into market weight. That is really important because that allows us to know what worked in the past is not working in the future the same way. Does that mean Meta's not going to go up? No, it means they're going to be more volatile. I actually did a trade I want to walk through, and these are the kinds of trades that you're going to have to learn how to do. We'll get to it in a minute because I have a lot to cover here. But understand where the puck's going, right? What Gretzky used to say. You want to see where we're going. This is where we're going. So if we overlay this, I mean, just look at this in 4 different quadrants. So what I've done here is I've put the RSP, put the Qs, SPY, and IWM. And by just watching the markets during the day, and sometimes I'll just throw stuff like this up so I can see what's going on. To me, this is just fascinating. And maybe I need a hobby, but RSP, look at the break. Look at IWM. Where are they putting the money? Are they running into the NASDAQ? No. My best trades on Friday were shorts. I had a really good long trade at the end of the day. If you look here, where are they putting the money? RSP, IWM. My easiest trades, I'm going to show you them, and they're mostly swing trades right now in RSP or in stuff that is linked to IWM. They're just nonstop. They literally are. We'll get into it later in this video, but I want to get this concept down. Start looking at where they're really putting the money. Now, let's talk about one thing that can derail us, one thing that we must watch. And I think that this is very important. If you look at what's going on in Bank of Japan, they're talking about the fact that we had this huge move down with the dollar versus the yen, and you can see this right here, how we're falling out of bed. If he starts raising rates again, this could be a problem. So what could throw all this off is the deleveraging of the US equity markets, which is tied to rates. And a lot of people don't understand this. So I'm going to explain this as simply as I can, and then we'll kind of go from there. But understand what they do is they can sell the yen, right? So they sell something that they don't own. Picture selling a bond that you don't own and you're paying 50 basis points to borrow money. And that's essentially what hedge funds and long only funds are doing. So they have their bonds and they have to buy their bonds in their currency. So they go and they sell those bonds without owning them, basically shorting a bond. And then they're paying them, I forget what the bond is. Let's say it's 50 basis. And then what they do is they take this money and they come and buy US dollars. And then after they buy US dollars, they might buy a treasury, okay, that's paying 4% and they're selling 50 basis points. So let's say that you could sell 50 basis points and buy 4%, okay? That would be really appealing, wouldn't it? Right. Now go and do that 10x, 8x, and that's what they're doing on leverage. Now the problem becomes when they sell the yen and sell that asset, being the debt, and then they come here and they buy the dollar and they buy that asset, you have a spread. So once you have that spread, you have an amount of money that you're making. Now that amount of money we're just going to show here for a second, but let's say that Japan decides to raise rates, which is their prerogative. Well, now that 50 basis points is 75 basis points to sell that bond. Let's say that JPOW decides to cut rates. Well, that 4% you're getting on the 10-year, now you're getting 375. I'm simplifying. What this does is it narrows the percentage that you're making on that trade. So let's say, to make the math simple, that you were selling at 1% and you're buying at 4%, you're making 3%. You're selling a bond at 1%, right? And you're buying a bond at 4%, so you're making 3%. Okay, how does this help you? Well, you go do it 8-to-1. Meaning lever out 8-to-1, 6-to-1. I know funds that do it that have levered out, they can lever out like 16-to-1. It's crazy. And what this does is it creates a leverage system. Shocking, right? Who's ever had problems with leverage? So once this happens, they have to unwind these trades. And that profitability gets smaller and smaller and smaller. Now you would think, because the profitability gets smaller and smaller and smaller, that when they're unwinding the trade, that they don't go back to the trade. Oh, my friend, no. It just means they need more leverage to get the same kind of yield that they were getting. So if they were levered 4-to-1, now they're going to go out there and maybe lever 6-to-1. But they have to unwind it first and then put it back on. And the cycle keeps going as Bank of Japan keeps raising rates. They have to keep doing it. And then what do? They keep delevering. This is the canary in the coal mine. This is the thing that could become an issue if they keep doing it over and over again. I don't know if they're going to raise rates. I have no idea. This is what you need to watch, and this is the rhetoric that you need to watch. If you're looking at this chart and you're trying to figure out where your issue may be, this might become an issue. And that deleveraging could be one of the reasons why the NASDAQ is kind of lagging here a little bit. And you'd say, what do you mean lagging? Well, we just erased everything. And you need to get that. Like you must understand that from that point on, when you broke on Thursday and you encompass this is what I refer to as a control bar, because that bar is completely in control. You did not get back over that bar. You formed a doji. Dojis are what? Signs of uncertainty. When you have uncertainty, you need to change the way that you trade, and you've had reason to change the way that you've traded here for a period of time. We can all see this, right? But once you encompass that bar, you have to realize you have to go all the way back to last Friday to even find anything that fits in there, okay? So here's Monday, Tuesday, Wednesday, Thursday, Friday, right? You get it? You look at this again on the weekly, and it doesn't really look, oh, that's the monthly, pardon me, I'm not gonna have time to edit. It doesn't really look bad, right? You would actually say, we're okay. But when you really get in there and look at that, do you have an issue? You don't, because you opened here and then you closed here. So the devil's in the details, isn't it? And I think that this is something that you have to pay attention to. So for me, if I had to give you a level to put an alert on, I'd put an alert right here. I want to know when we're above that. Now, can Nvidia get us over that level? Maybe. But I really think that you have to focus on this and pay attention to it, because if we went here and looked at RSP, well, they don't have a problem. They didn't turn around and encompass all those days, right? So then you go take a look at the SPY. Well, they have a problem. They encompass some of the days, and then you IWM. Okay, well, you just flipped the script. So where should we have concern, and where should we be short-term trading? Right? You would have to assume that you'd want a short-term trade on the NASDAQ, right? Which I'm going to show you how I'm doing in a moment. It's a little different than I've done it in the past. I'm going to give you a couple examples in a minute here. But what should you be looking at doing your swing trades and long trades on? Well, there's a theme out there, and we're going to get to the theme. But before we do that, let's focus on how I am currently trading this, and then maybe you can glean something from that, and you might find it helpful this week. Now, I want to run through a trade with you, but before I do that, I want to go through a couple things here that I think are really important. In front of us is the account that I've been showing on here for a period of time. And I want to walk through one trade in particular, but I do want to go through this because there seems to be some, I won't say confusion, but I think there's a lot of things that could be done a little bit better when people try to explain some of this stuff. This account, everybody, well, if you've been watching for a while, we started with $1.70. That's where we're at. I actually think I'm going to drop this down to just like 100 grand and just show that from now on. But I'll reset it, I think. I'm thinking about resetting it. Maybe I'll wait to the end of the year. I don't know. Trade expectancy is 262.84, meaning every time you touch the computer, that's what I expect to make. Profit factor is 171. This is really important for people to get. 53.9 year to date. 53.9. I'm thrilled with that. Do I want it higher? Of course I do. 146 average win-loss trade. Okay. So if you do this over and over again, and you do it a lot, then you'll make money, right? So that's what you're trying to do. It's really that simple. What I want to point out, and I'm going to change the size of this, I'm not going to have time to edit all this out, is that there are periods. Now, this is reflective here of a stock split in Nvidia, but that's not really what happened, so just be aware of that. But what did happen was that there was a drawdown in here that I'll go over in a second. It was slight, but it was there. And you have to understand something about trading, specifically any kind of trading, whether it's day trading or swing trading. You're going to have drawdowns. Okay, you just are. Now, if you take a look at this, you'll see that right in here, you're basically trading water. Like I'm up, I'm down, I'm making a little money. You can actually see it reflective, like right in here. And what's happening there is that it's just not working for that 3-4 weeks that we just kind of went through, or it's a little bit longer on some parts of this. It's actually a little, you can see the lift and then the drop and then you see it from there. But you got to understand you're going to go through periods of either drawdowns or where you're just treading water. And it just means that how you trade does not work during that period of time. Now, do you change your style? Maybe if you have more styles. Do you stick with the same style? For those that don't know, this is kind of a day trading account, straight run and gun, very aggressive account. Not all my accounts trade this way, but I think it's important to state. So understand this. You're going to have drawdowns. You're going to tread water. And it doesn't mean that what you're doing doesn't work. It means what you're doing doesn't work in that environment. And that's really important to get. But if you're around 53.9, 55, I think Simmons, who was a billionaire, was at 51%. I think Steve Cohen, who owns the Mets, I think he's around 55 or 56. His top guy's at 62. So you don't need, you need to be north of the coin flip, unless you're really going long term, and then you could be around the third. You had guys like Richard Dennis that were like around the third on a win rate and absolutely slaughtered it, because when they were right, they were right. But there's this misnomer that people have to be 80, 90%. It's just not true. It's not accurate. And you need to be aware of that. Just because you go stagnant or you have a drawdown, it doesn't mean anything. It doesn't mean that what you're doing doesn't work. It's just that kind of market. I have a very tough time believing, and let me show you this. So you can see I've done thousands of trades, right? In this account, it's pretty run and gun. And let me move to this before I show this trade. Let's do last 30 days. And what you're going to see is, okay, look, drawdown. Someone's got to explain to me, if they were trading tech and holding anything overnight, how when the US dollar in Japan comes out and the market tanks and you're long tech, how do you take a drawdown? Like, it's not realistic. Of course you're going to take a drawdown. You don't have a choice. You're going to get clipped. You just move forward. That's it. But you'll see the win ratio, the trade expectancy's through the roof. Why? Profit factor's through the roof, win ratio's through the roof, but the win ratio is where it is. Why? The amount of trades that I'm doing on this run and gun account has changed drastically. I don't trust anything right now. So when I go through these runs up after selling off, I don't know if we're going to roll back, revert to a mean. Nobody knows. But I will do larger trade size and less. Right, so I will change that. I won't change so much what I'm doing, but I will change that part of it. So I'll do larger trades, but I'll do less trades, and I will pull money out faster. This is a strategy that's worked very, very, very well with me. And let me show you this Meta trade. So Meta, I bought puts, and I'll show you how we did this. It was a failed breakout trade. I'm going to start making more notes in here and then making these notes available to people. That which gets measured gets results. I should say it again. If you're trying to get better, get a trading journal. I don't care if you use TradeZilla. I do. I used to make my own. Even the people that I coached, like, I would have them make their own, detailed. The way that this stuff syncs now is just a heck of a lot easier, and it's one less thing that you have to do. I like their product. I have no affiliation with them. There's no link, nothing. I don't care which one you use. But if you're trying to get better and you want to look at data, get a trading journal. They'll download it all in for you. So, but we bought puts here, and I want to show this because it's not normally what I do. Meaning, people will say to me, well, how do you scale out? How do you trim? So in this scenario, we paid like $3.90 for these puts, and I'll show you the trade live as well as the timestamps in a second. But then you'll see like automatically, boom, 50. Like I'm just out. Like here's half. I'm just locking it in. I'm not playing games. And then even the trimming, boom, okay, here's another 25. Oh, it does it again. Here's 15. My runner's 10. I'm down to a 10% runner because I really don't like what's happening here with the volatility. And I'll show you what I mean by that. But this I will change. So what people will say, do you change your style? Not really. What I will do is I'll do more counter trends of the trend because everyone's like a cat in a hot tin roof. And I also know that I'll do more counter trends of the trend on weeks, this week in particular, and next week. We're trading at 40% the average 20-day volume right now. These are the 2 slowest weeks of the year. Historically, they just are. Now, but let's get to it. Let's walk through this trade. So we're going to do a little more bonding here. Now, the trade in question I want to walk through is this meta trade, and I want to show it live, and I just also want to show you the timestamps on when we did it in the room so that you can see it as well. I find it very helpful to correlate that with that trading journal, with the timestamps in the room, and then showing it live. What I might do is I might change the account, and then I might just actually link a live account so the whole thing's on one page and I could show it quicker. That might be even easier. I'm thinking about it. Anyone has comments on that, how to show that stuff, let me know. But I'm thinking that might even be easier so you can see the whole thing at once. Anyway, if you see how we're playing out right here, or how this meta's playing out right here, you're seeing these pops over. All right. What we're seeing here is we're seeing a classic breakout pattern, right? People love these kinds of patterns long term, and there's a reason for it. So if you see right here, you have the what? You have your lower, right? Low. Okay. And then you go here, and now what do you have? Now you have a higher, what? Low. All right. So people love these. Okay, because they'll think of it as it's contracting, and it'll just look like it's just kind of working its way up, which it is, and then they're waiting for the ultimate where it's going to break out, and then all their dreams are going to come true, but this smashes their hopes and dreams, just like it did up here. Okay, so pops over, and then people really, it's like this is like textbook O'Neill stuff, because you fail, right? And then the second time you should go. And that's usually what they're looking for. And then it doesn't. And then you're dealing with this nonsense. All right. So you know that this is on a lot of retail's radars. And you're going into like a super light week. And we had this happen too. So what I'm always doing, and I will say this over and over again, I'm a pattern trader. So what do I mean by that? I popped over and hit all-time highs here on Netflix. And then I just faded. And if you look at the fade and how this happened, you'll be like, what does this have to do with meta? Everything's connected right now. One of the things you always want to watch is the correlation of the market. Right now, we are highly correlated, which is why trading ETFs is great. But look at this move, and how are you paid for getting in that move unless you got out right away? Okay, that's a problem because that's not retail. That's people squeezing retail one way or another to get them in or out of a trade, right? So, and then all of a sudden, everyone just walks away from it. Nobody wants to be involved with it anymore. Now that becomes resistance. So this is telling you that all the Magnificent Seven we already know are highly correlated. The correlation right now is like 2x. So when you start to see this stuff, you know that they're already playing the game. And we watched this already play out one day. We watched them play this out. So they rip us, and then it just fades. The same thing they did to Netflix. So you know that they're playing games off the open because all this stuff is kind of linked together, right? Correlated. Up here, we have a situation where the market's dropping. So while this is going on, if I've just overlaid this, let's put the Qs in here for a second and leave that as a line. But you'll see, like in here, that the Qs are dropping. Well, as the Qs are dropping, this thing was hardly moving. Now, what that means to me is I've got a divergence. And that's just not sustainable. It's not sustainable that because if you go look at the other tech names, they were all dropping once this started kicking in. And this would not drop. It just kept bouncing around. They're all linked. And when you know you have a high correlated market, that's what you're looking for. So all I was doing was this. I was waiting to just basically do the failed breakout short. So what I'm doing is I'm the mean guy that actually is shorting when people are buying the breakout. Because what they're doing and what retail will do is, again, they love these patterns because they're getting tighter and tighter and tighter. And then when you get up here, you're just supposed to explode for some reason, right? And that's great in a good market. But you have Itchy at the helm right now. You have a speech in 3 days at the time, when this was all going on. So you have a lot going on out there right now, and you have a lot of people that are moving like a cat in a hot tin roof. And on top of that, you're trading at 40% the average 20-day volume. So you're pretty much hit. So now, if you look at this, once you're popping over, failed, retest, failed, it's like perfect to lure people in. And once they did, and the underlying market's dropping, the The idea that Meta is going to somehow miraculously lift through that is just, it's just delusional. It's just not going to happen. Let's drop this to a bear chart for a second so we can look at the numbers. So all I do on this trade is I just watch. I don't even use anything else. I just know that the correlation's there, and I know that we're over, and I know that they just lured in retail. So I short on this bar, I buy puts, and then I'm watching, and you're going to hear it in a second here. But what I'm waiting for is I'm waiting for that big drop, and I don't get it. You'll hear it in my voice where I'm like, okay, well, I might have a problem here because it looks like we're curling up, but I'm not doing anything. I'm respecting the process, and that comes down to position size. If you can't respect the process, then your position size is usually too big. So once it does this, boom, out, half. Next, rallies up. Once it breaks a new low, I'll just tell you exactly what I do in these kinds of markets. Once it breaks a new low, it's on. I just start watching it. I just start wanting to pull money out. You want to pull money out when this is going on. You will make more money pulling money out here than you will here, and with less risk. And I'll show you what I mean by that. But what I'm doing here is I'm just waiting for this to break. And when it does, I'm immediately pulling money out. I'm not waiting. And then I'm just constantly monitoring the trade from there, waiting for the next opportunity to pull money out again and again until finally I'm out of the trade. Now take a look at this. Now what we're doing here, I'm just going to show you these so that you can see them. So 11:45, that's it. I'm out, and then I got out of the last because I just really don't trust the market here. And this is what I mean by that. So then 50% at 11:22, you can see where we're trimming here, and that'll correlate when you watch or with the other timestamps, and also if you watch the video, you'll be able to see when we got in, but the live trade when it takes place. But here's my point. I don't trust this. And so when this is dropping, you need to get out, right? You don't want to wait around for this. And I'll show you why. And I'll show you why you want to get out here. And a lot of people that trade options wonder why later in the day those options aren't worth the same amount of money. And this is a really important concept to get. So the way that I would refer to this is everybody pretty much knows what delta is. And I'm not going to get into all the Greeks, but once you push, let's say the delta is here, and then the delta is here and it's 50. Let's say they go here and the delta is 70. So you have the range of 20. The speed in which that changes, think of that as gamma. Think of stepping on the gas pedal as gamma. All right, or slamming on the brakes as when you're falling down. Think of that as gamma. We're not going to get into short gamma, long gamma. I'm not going to get into these concepts. I'm trying to keep this simple. You're stepping on the gas pedal. The difference in the speed in which you get there is the gamma. Okay, slamming on the brakes, that's the gamma. All right, just think about it that way. The faster you hit the brake, i.e. drop, the faster you step on the gas, i.e. run, the faster and the more that option is going to move. You want to take advantage of that. And I can give you a really good example of this. If you look at this stock for a second, and you look at right in here at that 11:22, and then you're watching this trade up to 12:30, and then you're dropping back down here to 145, and you're dropping down here to that 130, 145 level, take a look at this. Now, in front of you is the option, and I have it here for a reason. I have it on this side of the trade for a reason. But this is where we're getting out. Now, you're going to watch this, and I'll show you why this is so important for people to get. When I lift this up, and you see that in this area, this is where the getting's good. And these are correlated. These are actually line ups. And that's why I put it here. These are the 540 puts. Because they're stepping on the gas, I'm getting out. You retraced about 50% of the value of those to go through this. To come back down to lower, to not even be at the same spot because the gamma was different. That's why you're getting out into this. Okay, that's the best way and the fastest way that I can explain this. So when you're here, oh yeah, well, I would have made more money. I think it was an extra $1.50. Is that worth a 50% drawdown that you don't know? To me, it's not, but that's up to you how you want to trade, right? And then you can kind of see how this kind of got goofy, and then all of a sudden they'll start losing value. And that's a really important concept. You can see that right in here. But this is a really important concept to get. This is why the best option traders that are day trading options are not in these very long. Once they get the move, they're like, that's it, I'm scaling out of the move, and they just start pulling money out right away. That's why they lever and do such big trades, because they have to get out when the getting's good. If they wait too long, the trade goes away. I can do more on this. I could do a whole, literally a whole video on this if you want me to. Just comment below. Here, just watch this play out live. Look at this thing. It's just crazy. Same thing as yesterday. I wonder why. I'm just buy puts on Meta. Like, there's no way everything else is going to start rolling, but Meta, for some reason, they did this yesterday, and then it dropped $10. It's by the 540s. I mean, you'll know super quick. How's that going to hold? I'm going to pay $390. I'll know fast. They're going to be right or wrong. All I got to do is not break that level. If I do, just close it. I'm in. I'll tell you in a minute if I'm going to be right or not. See, I'm not down 50% on that bar. I may have an issue here. I'll be getting right out of these things because I should have at least finished 50% down on that bar. I'm not even close. My puts are actually going up in value, which I don't really understand. I mean, that's forming a flag. That's going to go against me, I think. But just let it play itself out. Yep, 460. I haven't pulled anything out yet. It's still not a disaster. It's still not really breaking. Not as much as everything else just broke. You can easily flip there and go higher. You might retest up here. There it goes. There they go. Good. Now I'm at $5 on those puts. 510. I'm going to close some of those puts at 510. That might be the beginning of it. You might get one more bar down like that, and I'll close the rest of them. Made $1 there. Now, I hope you found that helpful. I went into some detail there on purpose, and there are parts of this you might want to watch again. I'm trying to break this up into categories if you haven't been able to figure that out, between what you need to focus on the macro and the technical side of the market, and then also ways that I'm utilizing the current environment to make money. And I think it's really important for people to understand that. So there's some key takeaways in that video that you might want to watch again. But for those that are looking to take advantage of this kind of swing, I would pay attention. So let's just get to it. Anyway, Nvidia earnings, probably the biggest event. No one expects them to miss. Everyone expects 10% or higher. The people that are, let's call it, quote, in the know, okay, the Goldmans of the world, key bank guy that came out and caught this the first time around. These guys are out there pounding the table saying they're going to crush. There's a very well-known hedge fund that came out and 10x their position in Nvidia before this earnings. They went from 1.3 million shares. I think they're up to 14 million shares right now. Yeah, it's not something you can get out of post-market. So you have some big players out there making a lot of calls. I think the larger issue for us with Nvidia, before we get into these two major sectors that you need to watch, is this. I think you have to be super careful about what's going on here and how this is playing out. Now, what do I mean by that? Of course you do. I think that you have expectations in here that are decent. I don't think that they are crazy expectations. For example, if you're supposed to earn $40 next year. If you take $40, you times it by 30, it puts you at 1,200. The stock's trading right around 1,200, 1,300. You're in that range. If they come out and raise guidance significantly, which no one is saying they're going to, everyone is saying that guidance is going to start subsiding and coming down. I don't know that. And here's the wild card with this. When you realize that, I think it's something like 50% of their revenue growth is 5 or 6 companies. When you realize it's all the big dog, and every single big dog came out with CapEx and said they're increasing CapEx spending. Every single one of them, Meta, Microsoft, Google, they're like, if you remember those conference calls when they had them, these companies were literally coming out there and saying, yeah, we understand. Let me clean this off. They're coming out there and saying, yeah, we understand that we're spending billions and billions and you're not seeing anything from it, and you're probably going to sell our stock, but we don't care. I mean, every single company, every single one said it. Like, here's Meta, Google. Look how Google acted. Like it was not received well at all on any call. And the bottom line is they really don't care. They don't need the capital markets. You see, the thing that people aren't getting between now and what happened in 98, 99, they're like, oh, it's going to end just like a bubble. The reason the bubble ended on the internet was because they had to go to the secondary market. JP Morgan had a really good conference on this in last November, and he was actually on Bloomberg. But this is what's so interesting. They're just spending their cash. They don't really care. They don't need to go issue a bond in order to do what they want to do. Microsoft doesn't need to issue a bond. Meta doesn't need to issue a bond. They're just like, no, we just have all this cash. So we're just going to do what we want, because we know where this is going. Amazon increased. Okay, how'd this go for everybody on the quarter? It went over it didn't go over very well. I guess like a load of, I don't know, do the kids still say that? But so when you're looking at this, they don't care. So, and they all increase CapEx. So how are the customers that are 50% increasing their CapEx? And how is that factored into this? Maybe it's not. So that's the bull side of this. And I've seen people make a bull case that their guidance is going to be higher than people think it is. And I can see the validity on how Goldman and KeyBank get there. Now, the other side of this, let's take the bear side of this. Let's say Blackwell's delayed, and that's the next generation. How far back is that going to push us? I don't know, because Blackwell's their new technology. How far back is that going to push us? I don't have an answer to that. I would think it's like threading a needle. Let's just say that Blackwell's going to be delayed 6 months. We'll just play devil's advocate. So you're going to be delayed 6 months. Is the stock going to drop on that? Let's say it is. Why? It just means they're going to sell the other product they have now that they have no competition for. Please don't put in the comments AMD, please. And then what are they going to do? What's going to be next? They're going to just go out there and wait for the next product, which is only going to ramp them up even more, because now they're going to sell the other product. But let's just say that delay causes a drag. Okay, so that could be an issue. If they miss by any chance, if they do, this will be a bloodbath. So this is going to be your key driver for the market. It's going to be that simple. It will move the NASDAQ. It will move the S&P. It will move semis. It will move. So just be aware of that. That is the event of the week. We don't have anything that's even close to that. And I think that's very important. Earnings overall have been fascinating to me from the Kava, the salad company that apparently everybody needs to go to, and was it a good quarter? I thought it was a good quarter. I don't know why they're not plugging it in, but I thought it was a good quarter, guys. But I mean, for how long are they going to be able to sell $40, $50 salads? I don't get it. I see it with Sweet Greens too. Sweet Greens is actually reversed on this news, and I think it's important to just point out that it's like everyone all of a sudden was like, yay, salads. Well, it's not true. I'll have a Caesar salad if I'm going to eat it. But anyway, if you see this, it's really hard to not understand broken out here, and you've broken out of all-time highs, and that's a big move. When you break out of these kinds of upper channels, you can go parabolic. It's been a long time since I've seen a chart do this. I had zero interest in playing this, but let's get to two big themes that people are missing right now. Number one, interest rates. You currently know that interest rates are coming down, not up. So we know the direction of interest rates. We know they are coming down. We know they are not going up. You have 6.15 trillion. Now, this is as of July. What's interesting about this is it was actually more, even though they're saying it was a record. It's not. And I can get into where you should be getting this data. We should probably do that now. OFR. You can always go to this site. This is .gov, okay? You can always go here and get real data. March 26, 24. Money market funds reached 6.4 trillion at the end of 23. So to say that it's a record, maybe they're saying it's a record for 24, but I don't see it. 6.4 trillion at the end of 23. So you're already seeing money trickle out of money market accounts. And we know why that's happening, right? And I think this is important just to get this point, but let's go forward. Aggregate net reached new record 6.4 on December. OFR, and you can always just go ofr.gov to get real data. And you can get actual charts, everything. It's all free. Experienced cumulative flows of 1.2 in 23. So just so we're clear, coming into the year, you were right around the 4.8, 4.5 level, and now all of a sudden you added 1.2. So you went up about 20% on the year. Where'd it come from? I'm glad you asked. Retail account for much of the asset growth. The MF Monitor 1.2, 20% increase, 22. 40% of net inflows include March. Why? Retail, right? Retail packaged or panicked. Why? Why did they panic? We had that little crisis where every regional bank was going to go under, and it didn't. While institutional investors propelled growth, retail investors accounted for more than 50% of net asset increase. Okay, this is a really important part of this, and I want to hammer that home. 50% of the growth is retail. And if we just look at this chart, we can see why. Retail prime, left axis, you actually flipped over tax exempt. So they stopped buying tax exempt, and institutional prime money is just kind of flattening. And where is it flowing into? Also governments and treasuries. Now, the next three slides are going to tell you a lot. A continued strong inflow trend over the past 7 months into IG, investment grade bond. So here you are, and they're showing weekly flows into percentage of assets under management. Look at what just happened. All right, so right now they're getting it. They're starting to move into this field, and we're starting to see that. So this is pretty much one of the highest levels you've seen, except for the beginning of the year where people rebalance, and then when everyone thought they were going to cut rates. But we're back, and we've been back, and now you're going to start seeing money flow into bonds. Matter of fact, one of the most fascinating things that Bank of America pointed out to me was IG funds have fared better than mid and long-term funds over the past couple months. They're going short-term. They're buying the short-term. Okay? So you can just see that U-turn that we've made. Now you see how we're down, and now all of a sudden short-term. Now this is really good for corporations in general, all broad-based corporations, specifically those that lend money. Because when they can go to the short-term market and borrow money, it's a lot better for them than going to the long-term money because of the yield associated with the shorter time, but also gives them more flexibility, maneuverability, optionality, and how they're going to run their business. Think of a mortgage business, think of a lending business, and how much better it is for them on the short side than the long side. And now there's an appetite for that market again. Get it? How much of an appetite is there right now for these kinds of bonds? Assets under management increase and decrease. And what you're going to see here, high grade funds have seen inflows. I'm using investment grade, but you're seeing it across the board in high yield. I'm just not going to go into all the things because investment grade always starts out better. If you look at 22, This is where we were. So that's not great. Nobody wanted to be there. In 23, everybody was kind of like, maybe we'll do that. Maybe we'll buy some bonds. 24, you are ripping, okay? And you were near 19, obviously when we had zero interest rates. This can go a lot further. And to me, what's important about this is if you look at this, you're actually starting to move faster than this and where this ended up. So to me, this could be one of the biggest things that people are just not paying attention to. And that's going to lead us right into our theme. Now, UPST, they also lend money to people. When they lend money to people, what does that do? Well, they lend money at 8% and they borrow at 4%, just making the math simple. Why does it matter? Because if they cut rates and they still borrow at 8, or they still borrow at 3 now, and now they're paying out 8, they make way more money. And this is a trend that you're going to see. And they did a really good job explaining the trend. Now, I'm not a huge fan of the company, but as far as levered to an event, you don't get more levered than this. And when we saw this coming, we got in ahead of time on this. And we show that because I hate saying things like that. And then, so this is when we actually got involved. A lot of people always think that all I do is day trade. It's just, I compartmentalize the account. And you talk more about day trading because you do it every day. But I've done nothing. Not really done a whole heck of a lot here. There's not really much to do. You're setting up, and this is just beginning. And I want to be really clear about that. So when you look at the sector and go, okay, well, what is this that you're talking about? Anything interest rate sensitive, if you're not looking at that and understanding those sectors right now, you're pretty much missing the easiest trade out there. Forget about the Nvidias of a second, forget about the Teslas of a second, right? I'll crack jokes and, I think they're going to be huge, volatile, great trading vehicles. But this is just a very simple idea, okay? And what you're seeing is they're going to benefit greatly from what's going on. They're not the only ones. Another one that we got involved in was Arete. It's a mortgage company. Now, are they going to benefit from what's going on? If you look at the data that's out there, and I'm not going to have time to pull it up, but if you go out there and you look at the data that's out there, once we saw a slight downtick, in the mortgage rate, you saw a 35% increase in refinance. I personally think when they start cutting rates, I've been saying this for a year now. I guess if I keep saying it, eventually I'll be right. That you're going through 95. And I think you're going to go through a period, this is where I think we're going. I think we're going through a period of increased productivity, and I think they're going to cut rates into it. And the only time we've ever had this perfect storm, which is great for the broad-based market, okay, and that's why you're seeing RSP breakout, was 95. And from 95 to 98, it went on. I view Nvidia as our Netscape for those that are, in their 40s, like myself. So anyway, if you see how this is going, you broke out above that anchored VWAP, you're always watching that. These kinds of names start making a lot of sense to look at because they are going to benefit greatly, like lending trade. Okay, now this is not the greatest chart in the world, but here you are breaking out of what? A multi-year close. Okay, so you're setting up to break out. These names are setting up to break out. And I think that's really important to put a little thing there. All right, who else will benefit from this? If you follow the train of thought, so you have the people, the money lenders that are going to benefit from that. And I'm not going to go through every single one, but you can always comment below and show me your favorite one because there might be one I'm missing and I would appreciate that. What else benefits from this? Okay, XLRA. All we kept hearing about is the end of what? Oh, commercial real estate. It's the end of the world. No one's ever going to an office again. Well, when there's a recession, everyone will be going into their office. But what you see happening right here is you see a classic breakout from a multi-year base. And I always like sector breakouts more than I like stock breakouts because of what they are. As rates come down, these corporations will be able to refinance their mortgages. All of a sudden, their earnings and they're levered. Like these companies are levered like no other. You look at VNO breaking out here. All I keep waiting for it to do, waiting is for it to get some kind of wonky pullback. I haven't gotten it. And you're just seeing them over and over again. It doesn't matter. SLG, anything New York based, I'm very interested in. But, people are buying the malls. They're buying SPG. They're buying these names, guys. And the reason is because they know the leverage associated with that. You might even see names like HPP, which have gotten absolutely destroyed, be able to save themselves, even though they're not considered in the more desirable areas in the country right now. Doesn't matter. There's still a book value there. Same thing with BDN. So that tells you other areas or other pockets where you'd be looking at these names and possibly looking at the book values and saying, you know what, they might just trade back to book value. That might be interesting for me to look at. So you have that side of it. You have the regional banks that were struggling. There might be something there that's worth looking at, or you just might start looking at the regional banks and realize that they're about to make a bonanza because now they're going to be able to borrow cheaper, right? All those bonds that they had on their books that were, quote, unrealized losses where everybody panicked back here, right? Well, now they're unrealized gains when they start cutting. 6 months from now, 9 months from now, we'll be talking about unrealized gains on the books versus unrealized losses, which is why they should never mark this stuff the way they did silly. Did it during the great financial. All right, so you have that theme. Follow the steps. What's the next theme? Anything that pays an interest rate, anything that's paying a high interest rate is just going to grind higher. MO, BTI, any of these names, and you can just see it's day in, day out, and they are just grinding. That is going to continue. And some people don't like to buy these because they're cigarette companies. It is what it is. But anything with a high yield that's going to pay is going to go higher. Anything that is linked to home building is going to do exceptionally well. Why? Because they benefit from lower rates. This is a theme. It is a theme that is going to last for a long period of time. It's not going to change. The issue you might have is what happens with the dollar and the yen. There's not much we can do about that. The other theme you're going to see is you're going to see a little bit of panic here, okay? Because you're going to start seeing people diversify into hard assets when this starts to happen. Why they do that, I don't know, but they do. So they're starting to buy the hard assets, and what they would think about, where can I get something on my money physically? And so you're going to see the names of gold. Sometimes you'll actually see copper go up as well on this. We haven't really seen that yet. You're basically going sideways. But you will start to see that kind of stuff sometimes. But gold in particular, you'll start to see that. And then, of course, you have what everybody loves to trade, digital gold. Now, I drew this. Just be aware of this, and I'll show you something that we saw on Friday in the community, and they did a really good job of. But this is the secondary theme that I see developing right now, where you're in a position here, like, look at that. I mean, it's like textbook. You always clone them so you can see them. But if I go here on a daily and you just drop this down and you look at that, it's pretty clear that you're in this trading range and you keep touching the low end, and that these usually do end with a breakout. You know, whether this one does or not, it's so heavily manipulated, we don't know. But this is where you'll start to see those names. I did see this break out the other day, and it did on Friday. You had a control bar, you had to close over it, and you did. So they're going to be looking at gold. They're going to be looking at the Bitcoin names, guys. And where I think it's going, it seems to lean towards the asset holders of Bitcoin. So it seems to be going towards coin, seems to be going towards MSTR. You always have MSTX now, which is 1.7 that broke out the other day. This trade makes so much more sense to me than salads, but I'll trade what is ever happening. This all makes sense because what they're looking at is saying, I need something that is going to make me money and be a hard asset. And I know that people don't think of Bitcoin as a hard asset, but they do think of it as an asset. So if you look at that versus looking at the Maras of the world and saying, well, you know, that's still got some issues there. Yep, some of these, the miners, they're not looking great. So I don't think that's the way to do it. I think the way to do it is to look at the coins of the world, to look at the MSTRs of the world, and go from there. That's it.